What's up everyone, Dylan here. I wanted to hop on to do another episode of the weekly analysis video. With that said, we'll hop right into it. Both the S&P and the NASDAQ were seen red on the week last week, but the bulls stepped in right where they needed to. So usually Fridays before a holiday weekend are very dull, uneventful, usually choppy, but this past Friday was not like that. Okay, so there was two pieces of bearish information that came out on Friday early in the morning, including Trump warning Apple that foreign-made iPhones could face significant levies due to recent developments, and Trump was also saying that the EU has been very difficult to deal with, recommending a 50% tariff on the European Union, which would start on June 1st. So both those moved the S&P and the NASDAQ to their lowest points of the week, right? The S&P was seen down 4% from peak to trough as of Friday early on. However, despite those bearish pieces of news, the bulls still came in and bought the dip and defended two key areas. Those two key areas included the 200-day moving average on both the S&P cash index and the NASDAQ futures. So as you can see, SPX came right down into that 200-day moving average right after the open on Friday and bounced almost perfectly. We go to the NASDAQ futures as well, and you could see the same exact formation in terms of both indices coming down right to those 200-day moving averages and bouncing respectively. Okay, so the fact that there was bearish pieces of news, yet the bulls remained resilient, defending key areas is very, very important and should not go overlooked. Okay, so that is very important. And going forward, those two lines, right, the 200-day moving average on SPX and NASDAQ futures are going to be very, very important to gauge if and when another pullback occurs and those areas get tested again. Okay, so another thing that I talked about last week was the 30-year yield, right? If we look at US 30Y on the TradingView, you could see that this thing did in fact get above 5%. Last week's video I said if it were to get above 5% and hold, it would be viewed as a headwind for the market, aka bearish. Okay, and on Wednesday at 1 p.m., the 30-year yield pushed to new weekly highs. It took out Monday's high, right? That was a 1 p.m. bond auction, okay? And you could see once that broke above the weekly highs, well above that 5% threshold, what happened to the S&P? That was 1 p.m. on Wednesday, and you could see at 1 p.m. on Wednesday, that is what the S&P did. So clearly, it backed up what I was saying in terms of if and when that 30-year yield got above 5% and had the ability to sustain value, that would be a headwind for the market. Okay, and that's exactly what we saw. So since from that 1 p.m. bond auction to Friday's lows, the S&P moved down over 3%. So clearly it was a heavy weighting on the S&P and the NASDAQ, as well as those other two things from Friday that also exaggerated the move. However, you just saw that the 30-year yield could not sustain value heading into this week. On Monday or Tuesday, or today, it dropped below overnight and has since been below and trending lower. And as a result, the S&P and the NASDAQ have been getting rewarded off that information, right? Where it now becomes a tailwind, aka bullish for the market, and it's supportive of the market. So, in addition to the S&P and the NASDAQ both holding their 200-day moving averages on Friday, there was two pieces of information that were bullish that came out over the weekend. So the EU 50% tariff news that came out Friday after 7 a.m. Was reversed on Sunday night. So on Sunday night, President Trump had a productive phone call with European Commission President and said that he would delay the introduction of the new 50% EU tariffs until July 9th. On top of that, there was reports that suggested that Japan will reduce its super long bond issuance as the government takes steps to curb the recent rise in yields. Higher Japanese yields have been one factor behind the rise in global rates over the last few weeks. So the Japan issuance news, along with the pushback on those 50% EU tariffs, helped the global yields lower this morning, which also helped the S&P and the NASDAQ get supported. So if we look at JP30Y, which is the 30-year yield for Japan, this thing was leading the move higher, and it was far accelerating the move in the 30-year yields for the United States. So again, and that was from Adam Crisafulli. He said the higher Japanese yields have been one factor behind the rise in global rates over the last few weeks. So because the Japanese government came in and kind of reverse course in the direction of those yields, it ultimately helped the U.S. yields also move lower, and as a result was supportive of the S&P and the NASDAQ. So that's something to keep an eye on as well. Those rates, right? That 5% yield for the 30-year for the United States 30-year is very, very important to keep an eye on. Okay, if that thing gets back above, it could be a headwind for the market. Okay, now obviously there's other factors that move the market, but that certainly would not be a good thing. Okay, so where do we go from here? First off, there was a double top that occurred on Monday and Wednesday of last week on the NASDAQ. Okay, so that lines up with about 21,558-ish. Okay, you could see two clear areas of resistance. That is a very, very key area to keep an eye on going forward, as well as that trend line that I continuously show you guys on these videos. Okay, so that trend line, which was clear support from October 2024 to January of this year, has not been retested this year yet, or kind of it did kind of here, but ever since making the lows in April, it has not been retested again. So if and when the NASDAQ tests this purple line, which was resistance last week, if it has the ability to sustain value, right, kind of comes up here, sustains value, that trend line will be the next spot to look at to gauge relative strength and weakness. If you're a bull, you would want to see that bulls push price above that black trend line and sustain value above it. That would show continued resilience. Okay, if it fails at that black line, then it might need to come back to retest that 21,558-ish level, and that could be another area to kind of gauge relative strength and weakness. Okay, another thing to look at is NVDA. NVIDIA reports earnings this Wednesday, tomorrow after the market close. It reports earnings, as well as we also have the Fed minutes, right? The minutes of the Fed's May FOMC meeting, which is just an overview of the May meeting, the Fed decision meeting. Okay, that occurs at 2 p.m. tomorrow. Okay, Wednesday, May 28th. So 2 p.m. Fed minutes, and then after 4 p.m. you have NVIDIA earnings. NVIDIA is one of the highest beta mega cap names in the market. So if that thing has blowout earnings up or down, it can change the sentiment of the overall market because it's very, very influential. If you want to play earnings, have at it, but good luck. over my career, I've made a lot of money playing earnings, but I've also lost a ton of money trading earnings. So all I have to say is that if you swing overnight into earnings with options, there's not much edge in it. Okay, at least for me. I'm speaking on my behalf. Again, I've made a lot of money. I've also lost a lot of money, and I have come to the conclusion that it is a shot in the dark. And they can beat earnings, they could go down, they could miss earnings, they could go up. It's all over the place. There's so many different outcomes that can occur. So going forward, Thursday you have jobless claims, and then Friday you have PCE and Consumer Sentiment. So there's some key events starting off with the Fed minutes and NVDA earnings tomorrow. Okay, so that's definitely very important. The biggest threat to the bulls, right? The biggest pro to the bears would be either the NASDAQ and SPX breaching those 200-day moving averages, which marked Friday's lows, or the VIX bouncing at this key trend line, okay, stemming from all-time lows back in November 24th. We have this trend line here. Let me draw this up a little bit. This trend line right here, again, has been support since November of 2024 with multiple tests. 1, 2, 3, 4, 5 different tests that all acted as support. And each time this thing has acted as support, it has coincided with the S&P dropping. Okay, so definitely keep an eye on that level, which sits at right around 19.10 on the June VIX futures. Okay, so those are the key areas that I recommend looking at going forward, and that's about it. So short and sweet video today. I went over the upside areas, the downside areas, and the key events to look out for, as well as keeping an eye on the 30-year yield for United States, which on TradingView is US 30Y or TYX, I believe. TYX, yeah, 30-year bond yield. So on this thing, again, 5% on TYX is very, very important to look at going forward. And that's basically the pain threshold for rates and when rates become a problem for U.S. equities per se. All right, but that's it for me. I'll talk to you guys soon. Peace.